Hello everyone, I would like to present you my Bitcoin trading agent that I have prepared for my second Practicum project for Regis University Master of Science Data Science program. I am Evrim Makgül and I hope you may find this project as intriguing as I did. In order to be able to explain my work, its components, my data and results well and fully, I will focus on these subjects. I come from economics finance background and have high interest in subjects such as time series and neural networks. Before intending to do this project, I had a reinforcement learning class and successfully presented an exchange rate prediction project at my first practicum. Small talks that I had with some of my close friends trading on Bitcoin merged with the other factors and brought this Bitcoin trading agent project in life. The agent's main algorithm is from reinforcement learning. It is a self-learning agent through trial and error. Before providing detailed information about the agent, I would like to discuss a few points. These are purpose, expectations, and limitations, so that I can augment some insight regarding the agent in terms of its capabilities. I have explained my motive already. Regarding the purpose of the project, I aim to come up with a tool that can trade without supervision. Reinforcement learning is the key approach for this purpose. As long as new data is provided, the agent applying the reinforcement learning technique gains experience and learns better and adapts better to the given situations. My expectations are not high, yet I am expecting my Bitcoin trading reinforcement learning agent to accomplish somewhat successful trades and show some promise that this idea carries some potential. It is obvious that some profit is expected from this agent, though there are no set limits for the same. Since the agent will learn by experience in time, it should also be expected that the agent will have an exploratory attitude and search for different strategies, especially in the beginning. This being said, that would be normal to observe the agent to have some unsuccessful trades often. However, it should settle with the rhythm in time and should have more successful trades than unsuccessful ones. Limitations, mostly because time and complexity reasons, are lack of technical and fundamental indicators. I use none in my work. The method is limited to a simple deep queue network. My workstation or computation power. I have limited the training input or states. I also limited the active trades with 6 hours. While each one of these items can be a limitation, they can also be thought as an idea to improve the robustness of the agent by internalizing these factors in the design. In this section, I will give you some details that make this project possible and different than the similar works. The instrument of this work is Bitcoin. My data is a time series. I use reinforcement learning methodology and specifically deep queue networks to design the agent. The instrument of this work is Bitcoin, and as most of the financial data, Bitcoin is a time series data. I used hourly Bitcoin data, and my target variable to execute trades was closed values of the hourly data. Reinforcement learning is one of the three traditional approaches. It is a type of machine learning technique that enables an agent to learn in an interactive environment by trial and error, using feedback from its own actions and experiences. This aspect of the reinforcement learning makes me think that a baby or a child learning her existence in the universe with trial and error. Just like a child, the reinforcement learning agent gets rewards or punishments for its actions with the environment. So how do we explain this model mathematically? Let's look at it. We have an agent and an environment. Our understanding is this agent will interact with the environment, and this is how it happens. The environment feeds the agent with a state, an information that is explaining what is happening in the environment. This happens at a specific time. Let's call it time t. Then the agent takes the state, evaluates, and acts upon it. Again at the given time t. With this, the agent reaches into a new environment. Now the time is not t anymore. It became t plus 1. When the agent reaches to this new environment at time t plus 1, it gets a feedback for its action at time t that we call reward. The environment is not the same, it is a new one. This is a similar to previous, but a different environment now at the time t plus 1. Since the agent is now in a new environment, it should know about it as well, thus gets a feed from the environment, another state, for time t plus 1. That is explaining the new situation of the environment to the agent. This cycle continues, and that is how the interactions of a reinforcement learning agent with its environment is mathematically explained, making reinforcement learning approach possible. When we mathematically define the possible actions that an agent can take, we are giving it options to do. In my work, these actions are buy, hold, or sell because this is a trader agent. What I expect is the agent to choose from these actions wisely in accordance with the situation that is provided to the agent as states. About this wise decision, there is a method called Q-learning that I used. Q-learning is a model-free reinforcement learning algorithm to learn quality of actions. By looking the quality of these possible actions, the agent chooses wisely, meaning the action with the best Q value. I will not go to the details how these values for each action is calculated mathematically, but there are a few things that I would mention. First of all, my agent learns with trial and error. Since the method is a trial and error method, the agent will not need to correct Q values. Some approximations of them are good enough to the agent so that it can navigate from state to state. In order to provide this approximation, deep neural networks can be utilized, and that is what I have done in this work. Instead of choosing a Q value, the agent of this project takes states and finds some approximate values for each possible action, and the agent uses them to determine their relative qualities. In this section, I will talk about my data. First, I will mention the source and how I acquired my data. Later, I will provide some insight about my data as well. Bitcoin is a traded method in different markets. Among my options, I prefer to go with Binance due to its relative size. When I first started to acquire the data, I had two options. I was either scrape the data from their website with Selenium, or I was going to use their API. The ethical choice was to go through the API, and that is what I have done. My problem was that I had not used any API before, thus I had to invest some time to learn how to do this first. Eventually, I have acquired a few different types of data formats. In the end, I decided to go with the classical OHLCV, meaning open high low close volume data. Their API was allowing to get 500 data points at a time. Without knowing how many data that I will be in need of, I wrote two functions. One, allowing me to download chunks of 500 in the time order that I needed, very last 500 hours data point, and a second one formatting it into a data frame regardless of the number of the chunks. I have had different tests with different size of data points in my short amount of time. My insight is that the data points and the time of training increases, the robustness increases as well, though this is just an intuition I could have. Unfortunately, I could not provide any statistically significant comparison results for them because they were not so many. I would say I had maximum 20 tests with more than 2 hours training and less than 10 with 5+ hours training. As you may follow from the slide, a chunk comes with 500 data points, OHLCV information along with the hourly time information. I called to this data classical due to the fact that trading data comes mostly as this and referred as candlesticks on the graph. Here, I was hoping to provide more information. However, in order to keep the presentation short, I will provide this candle chart and share my insights orally rather than with more graphics. So this is a typical candle chart graph with volume statistics at the bottom. Reds are indicating lower close values relative to the opening values of the given hour, whilst green indicating relative higher close values. The graph starts with Bitcoin price a little under 12K and ends a little above 18K. By looking at this graph, my first impression is that the market was on a stagnant period between mid-September and mid-October. Before that, there is a bear market, meaning price drops in time, and a bull market, meaning price increases in time after that, which goes to almost end of November, when price volatility increases significantly. Even though the price volatility seemingly got lower at the end, the volume amount of trade is still very high relatively, which can mean that there is still no settled direction for the price. Under these circumstances, what should I expect from my agent? First, the training starts with a high epsilon value. Epsilon is an hyperparameter that is used in RL to define the exploration tendency. Exploration and exploitation are two concepts regarding to the agent's actions. It is quite simple actually. When the agent exploits, it does the action that it evaluates as the best action, and when it explores, it tries something new, a new action it did not try before. I use a gradually declining epsilon value, meaning that the agent will explore more in the beginning and less in time. According to the Bitcoin graph, my agent will learn to exploit trading during horizontal price movements because it will have the first experience after the 170th data point, and that is close to the mid-September. After that though, the agent will have a really reduced epsilon value, thus will try to exploit what it learned more. Therefore, it should not be a surprise if it makes lots of losing trades during the bullish movement. One another point is the sharp price movements that happens at the very end. I cannot foresee something about that, because it will not have any experience for such sharp moves. Let's look at the results now and interpret them. At this section, I will have my interpretations over the results, my challenges on the road, lessons learned, and improvement ideas. When I check the results in respect to my expectations, I explained in previous slide, my observations are as followed. There are 154 buy and 167 sell actions executed. Considering that, the price movement shows a bullish trend in general. I would expect more buy trades and more successful trades in buy trades. It seems neither of my expectations valid. The interesting thing, to me, is the agent gets as successful in sell trades even though they are usually against the general trend. I suppose this could be assessed as a positive aspect. For the different time periods of the price movements, I would say the agent was lucky with the trades at the beginning. It had more buy trades than sell trades during the bullish movement, yet the total amount of trades executed at this period is significantly less than the other periods, as it can be expected. Sell trades fails more than they succeed at this period. During the volatile section of the price movements, relatively short period of time at the end, agent has quite a few trades. This is another interesting observation to me. I had some summary statistics in this slide, as I have restrained the agent to stay on a trade no more than 6 hours, or 6 steps. The average time steps that it was in trade is 3.67 steps. The agent had 324 trades and stayed in trades for 1,190 hours. In light of 2,500 total data points or hours, the agent preferred to stay out of the trade more than half of the time. In general, 53% of the trades are successful. This ratio is close to 54% in buy trades, whereas it is close to 53% in sell trades. There were some ups and downs in trades, yet there is a capital gain at the end. To me, this graphic is telling me more. It is interesting that the agent failed trading in terms of capital gain during the bullish movement. That seems quite significant, especially for the first half of the trend. It seems the volatile period of time is what the agent enjoys, as well as at times when there is no significant trend to talk about. One more assessment that I had is the agent is having hard time to deal with extremely sharp price changes. We should also acknowledge that a buy and hold strategy would be more beneficial than the agent's trading strategy. Before starting to this project, I have acquired a few sources to study. I was expecting things to be smoother, yet during my study I realized that the challenge was bigger than I expected. The reason is teaching materials that I was able to find were not as good as in other applications of machine learning. Theoretically, the sources are good and helpful, but that is not the case for the application side of it. Especially time series applications are very hard to find or decipher. I had to learn by debugging codes that I was able to find in order to gain some insight. That was quite a time-consuming process, worrying me time to time about the outcome of the project. I wish I could have more weeks to work on this. One of the other time-related factor was the long training sessions. For some significant results, longer training hours, even days, seems as a necessity. Nevertheless, it was a fun project to me and I found it very compelling, yet with lots of promises. I have uttered some of the lessons that I learned up to now. I may add the effective coding among them. Since the trainings take so long, effective and time-saving coding is important. As an idea, starting to trading with simpler forms such as with a sinus function, and slowly adding elements to that could be a good ground for the agent to learn and act better. I also noticed that the agent had some actions contradicting with common sense. These could be due to the rewarding mechanism that I use and restrictions that I give to the agent. They might be considered as weaknesses and can be treated accordingly. The next is actually simple, giving me more time to the project and experiment more by changing all the restraints and weaknesses I identified so far. I would expect new trades-off or new challenges to be identified as I would work on it. As always, I would like to thank you for listening and watching this presentation. I had some good challenges on the road, and it was not easy to deal with them. I thank my instructor Christy Pearson so much for that reason. I cannot explain why, but talking to her gives me all the soothing that I need, calms me down, and puts me into the focused mindset to get the job done. I must also thank to the coding community for sharing so much. There is always something I have to go check and the answer is always there to be found. Lastly, I would like to thank to the sources of my references as I use them vigorously. Thank you. All the best.